Good morning, everyone, and welcome to this webinar on trading with the EU in 2022. I apologise for the technical hitch at the beginning there. It appears we haven't sent out the link correctly. I hope you've got it now and everyone that needs to can connect. So we'll not waste any more time. We'll get on with the webinar. My name is Mike Wilson. I'm the founder of Go Exporting. And today we're going to look at, as the name suggests, what's happened with trading with the EU since the beginning of 2022 and really since the beginning of Brexit. So we're going to look at what changes Brexit introduced, what the implications were, and then we'll look at how you can manage that moving forward, post-Brexit EU trade guide, and also look at what the opportunities are. It's not all doom and gloom. There's a lot of good things out there that in the export field that we feel people should be looking at. And then we'll have a period for questions at the end. There is a Q&A facility on the screen, which please feel free to ask any questions. We'll come to them at the end, or you can use the chat function and I'll answer as many questions as I can at the end of the webinar. Well, just firstly, if I may, a little bit about Go Exporting. We're a specialist export consultancy. We're passionate about helping our clients to expand internationally and to make the most profitably expand into international markets, and obviously to manage the Brexit transition, which has been a major area for us over the last 2 to 3 years. We've become quite specialist in that area, working with the likes of Business Wales and banks and so on to help manage the transition for customers, and doing a lot of Brexit audits, for example, for clients across the country. So what changes did Brexit introduce? Well, firstly, we're no longer part of the customs union or the single market. That's changed a lot. It means that we can no longer just send goods to France. We have to go through a customs procedure and raise customs documentation, and there's the potential for duties and so on. We became a third-party country to the EU, so as far as they're concerned, we're now no different than if they were dealing with the US or Australia or someone like that, although we do obviously have the trade and cooperation agreement, which has maintained tariff-free trade between the two blocks, between the UK and the EU. Or did it? Well, not in all cases, unfortunately. The message on the label says there's going to be tariff-free trade, but it's been a little bit more complicated than that, as we'll see as we go through this presentation. Just to let you know, the presentation and the recording will be made available at the end. We'll circulate it so everyone can get a copy of it. So what were the implications of Brexit? Trying not to scramble your brains like the poor chap in this picture here, but there's quite a few things that we have to go through, from the EORI numbers through to Northern Ireland, a lot of changes, and we're going to summarise those for you as we go through. Firstly, EORI number. So anyone that's trading internationally needs to have a UK EORI number based in the UK. That stands for Economic Operators Registration and Identification Number. Now, if you were previously trading internationally, you should have already been sent one of those. But if not, and you're just starting, then you will need to apply. And you can apply for it quite easily through the gov.uk website. Now, it doesn't take long, but it may take you, a few hours to get the actual number itself. You may also need an EORI number in the EU. You only need one to cover the whole of the EU, but that depends on how you're transacting in the EU. If you're carrying out any kind of economic transaction there, if you're handling the customs documentation, for example, in France, and delivering DDP, then you may need an EU EORI number in order to be able to fulfill that. And if you're dealing with Northern Ireland, you may need an XI EORI number, which is a special number for Northern Ireland itself. Now, luckily, that if you have one of those, that is classed as an EU EORI number as well. Northern Ireland being a special case because of the Northern Ireland Protocol, and is quite literally classed as part of the EU in many ways. So it all starts with the EORI number. You need to have that before you can fill out customs documentation, for example. Now, when you are exporting, it all really starts with the HS code. The HS code is the customs description, the code that describes your product to customs. And that actually determines everything that follows. It'll determine which duty rates your product is liable to. It'll determine if it requires any licenses, any approvals, which procedures you need to follow. So as you can see, you need to make sure it's right, because it really does determine everything that moves forward. When we were just part of the EU, we didn't need a HS code, because into EU traffic, no coding, no customs documentation was required. But this is now the same as if you were dealing with any other country. You need to give your product this description, the HS code, and you need to make sure it's right. You can ask for a ruling from HMRC if you're in doubt, and they'll give you a binding ruling on which HS code you should be using. But beware, once you've got that, you are bound by it. And if it means that you have duty on your products, then duty is what you'll have. You're stuck with that. So there are a couple of websites there that you can check. Trade Tariff Service, gov.uk. You can check the commodity code for your product, but it is important that you do get it right from the very beginning. Now, as we've left the EU, as we say, we're no longer part of the single market. We're now required to have customs declarations for every import and export of our products on all movements in and out of the country. For exports, a full declaration is required when sending to the EU from 1st of January 2021. But for imports, the government introduced our border operating model in stages to make things a little bit easier for importing companies, for UK companies. So for imports in 2021, you could defer your full customs declaration for up to 175 days. And that meant you could also choose to defer the duty that was payable, if any was payable, for that period of time. So it gave you a nice buffer period to get used to the rules and regulations, and to avoid the duty or delay the duty. But after the 1st of January this year, I'm afraid that easement ended, and you now have to have a full customs declaration on all imports into the UK. So if you're just starting out, you need to be able to do that. You need to be prepared. Duty liability is also now immediate, so it's recommended you have a duty deferment account. Duty deferment account allows you to delay the duty from the point of import through to actually paying it on the 15th day of the following month. So it is important. It's good for your cash flow, and certainly for certain customs procedures, you need to have a duty deferment account in place. The government made it easier to apply, so you don't now need guarantees, providing you're in good standing with HMRC. So it's quite easy to actually apply for one these days. So we recommend to everyone to do that. And the government also introduced postponed VAT accounting. So you can postpone your import VAT, which is due on every import that comes into the country, through to your next VAT return. Now, you do have to remember to tell customs that that's what you want to do. So you have to tick the right box to delay the accounting, the VAT to your next VAT return. So effectively what that means is you don't have to pay, lay out the cash, because it becomes an in and out transaction on your next VAT return. But do remember to make sure that you tick the box, or tell your agent, your customs agent, freight forwarder, to do that on your behalf, so that you don't have to pay the VAT at the point of import. And as from the 1st of July this year, we'll need to do safety and security declarations on imports. That's a summary for the government to show if there's any potential dangers with any products that are coming into the country, if they're dual use, for example, it could be dual use, so they can check on them if needs be. We haven't needed to do those up to now, but we will now have to do them from July. Now, it is still possible to use a streamlined, simplified declaration process rather than doing a full customs declaration at the point of import, but you do have to be authorized to do that. So either you or your intermediary, so your freight forwarder or your customs agent, whoever's handling your customs documentation for you, needs to have authorization to be able to use a simplified declaration. There are two types of simplified declaration. There's the simplified declaration procedure, and that allows you to just put forward the minimum information at the point of import, and then to do a supplementary declaration later on, by the 4th of the following month. But as I say, you do have to be approved to be authorized to be able to do that. There is another procedure called entry and declarant's records, where you can say, right, I'm going to enter this information to my own records and it will be there for you to check. Now you do, again, you have to be authorized to do that, and you have to show that you have the processes in place to be able to maintain that. And you can only apply for one of them. So you need to decide which one you're going to go for, whether it's a simplified declaration procedure or the EIDR. And it does help, obviously, to ease the burden at the point of import, avoids any delays. And it allows you to put your supplementary declaration, your full declaration, on by the 4th of the following month. So it gives you a bit of breathing space, and also allows you to pay the duties and taxes on the 15th day of the following month, which goes out by direct debit from your deferment account. Now, it can take a little bit of time. So as I say, to apply, you need to be to have access to the customs systems chief or the customs declaration service, which is going to take over from chief. So you need to, and you do need to have this authorization, which can take up to 60 days. You know, one of the other big areas of implications of Brexit has been rules of origin. I wrote an article in September 2020 calling rules of origin the greatest Brexit challenge you've never heard about. And it's been shown how important it really is and how you need to understand the rules. And that rules of origin govern that they're your passport, your goods passport, to the way they're dealt with in international trade in terms of duties in particular. And they can have a profound effect on your product's international viability. So you have to be able to determine the origin of your product. And that can be difficult with today's complex supply chains. It's not always obvious where the product comes from. It's not just the country where the supplier is based, for example. Boeing Dreamliner buys products from 9 different countries. In UK-built cars, it's recommended that only 41% is sourced in the UK of their components. But of that 41%, only 25% is actually UK origin qualifying product. So therefore, there are rules that have been introduced to help determine if a product truly is a UK product, for example. If it is, then the UK-EU Trade and Cooperation Agreement allows 0% duty on all qualifying goods. But it's that qualifying goods which is the key point there. Goods have to qualify to be treated as a UK origin product or an EU product if you're importing into the UK in order to claim this 0 duty. Now, one of the good things with the agreement is that bilateral accumulation applies, and what that means is that EU components can count towards UK origin and UK products can count towards EU origin, but only if there's been substantial transformation there's been enough processing within the country. So, and that is something where companies have come a cropper and have fallen foul of that particular rule, in that maybe they haven't had sufficient transformation. We'll look a little bit more at that in a moment. There's no quotas on the movement of UK-EU goods, which is obviously good. And you know, so that means that it's a very good agreement from that point of view. But as we said, you must be able to prove origin, and to make it more difficult, there are different rules for different products in the UK-EU Trade and Cooperation Agreement, which is in fact the only EU trade agreement to reduce all duties to 0. But as we've said, only if you qualify for UK or EU origin. So how do you qualify? That's the key thing. How do you qualify as a UK or EU origin product? Well, one of the first ways is if the product is wholly obtained, which means that it comes entirely from products in one country. So usually this is classed as products which are grown, born, bred or mined within a country. So things like onions or beef or mushrooms and so on. So if they're quite straightforward to work out the origin because they've been, as it says, grown, born, bred or mined here. So if that's your product, then no problem, you can easily claim that your product is UK or EU origin. But otherwise, you need to show that the product has been sufficiently worked or processed in order to claim that the last substantial processing was, let's use the example of the UK, if you're a UK exporter. So the last substantial processing of your final product needs to have been in the UK. And there are different ways of showing that the last processing was in the UK. There are different criteria, different rules which are built into the Trade and Cooperation Agreement in order to guide you. And one of them is the value added criterion, which is also called the max non. So that's the maximum non-originating materials, which you may have heard of, the amount of non-UK products that can go into your product before you can call it, or until you can't call it a UK product. Or you can change the tariff heading on a product. So if you're buying components with one tariff heading, by assembling them or working them, processing them, you're actually changing the tariff heading, then again, that will be sufficient to nationalize a product to a UK product. Or in some cases, there's specific criteria, for example, in the agreement, for example, for textiles, if you do certain processes, then that immediately allows you to claim UK origin. So if we give the example of the max norm, or the value of non-originating materials, so it's the value added, or the maximum non-originating material percentage of in the agreement. It's normally the X works price. And the graph here, the diagram here, shows how you calculate that. So you can look at the amount of originating materials, the amount of products which do come from the UK. And then you can look at the labor cost, your profit, general costs, and then non-originating materials. So you have to work out what the value of all of those are as a percentage of your X work selling price. And if the non-originating material part falls below the level specified in the agreement, then you can claim it as a UK product. But beware, the maximum non-percentage does change, it varies. So as you can see here, chapter 87 for vehicles, one subheading 8701, the maximum non-originating material value is 45%, and yet for other subheadings it's 70%, and hybrid vehicles it's 60%. Now those are special cases which were brought in to promote electric vehicles, to promote the production of batteries, for example. So they're special cases, but it shows that you do need to look at the agreement and understand what the rules are for your product. So chapter 84, for example, is maximum non-originating material is 50%, or CTH, which stands for change of tariff heading. So if the products you're processing, if you're buying them as one product with one HS code, and then you're processing them and they become a different HS code, different tariff heading, then that again gives you the right to call it a UK product. And with some other products like plastic articles, for example, then it's again 50% max num, or change of tariff subheading. So that's a little bit easier to actually claim UK origin, because you don't have to change the whole tariff heading of the HS code, just the subheading. So there's less processing that's required. But as you can see, it varies, and you do need to know exactly what the rule is for your product. So you need to have sufficient transformation. So let's look at a couple of examples and see if there's sufficient transformation there. So what if you import from the EU, hold in stock, and then resell to the EU? Is that sufficient transformation to allow zero duty? Well, unfortunately not, it's not. So you would actually incur duty on that kind of transaction. And this is the issue that Marks and Spencer had very early on after Brexit, when they were bringing their Percy Pig sweets from Germany into the UK. They were doing nothing with them, not even repackaging them, and then selling them back to Ireland, for example. And they suddenly found that they were paying duty on those products, which they weren't expecting to do, because they thought that the Trade and Cooperation Agreement would cover them for, would allow that, because it's an EU product in the first place, going back to the EU. But unfortunately, that's not the case. looking at the detail of the agreement, they would have to pay duty. Now, there are ways around it. And we've advised several clients on how to do this. One saved over £600,000 in duty after we advised them. So it is worth looking at if you are incurring duty because of something like this. So what if you import from the EU and then you repack it and relabel and then resell to the EU? Is that sufficient? Well, again, no, that's not sufficient transformation, and duty would be applicable. Repacking and relabeling is specifically mentioned in the agreement as not being sufficient to allow you to claim a UK origin product. What if you import from the EU, process the goods in a particular way, and then resell to the EU? Well, yes, assuming you've got that sufficient transformation, then you qualify for 0% duty. So as you can see, it's quite complicated. You do need to look at each individual product and see what the rules are, and then work out whether you can legitimately claim that the product is UK origin if you're exporting, or EU origin if you're importing. But you do need to prove origin. So you need evidence of origin from your suppliers, for example. So you could have a declaration from your supplier saying, yes, this is an EU product, or it's a UK product if you're a distributor. You can also make a self-declaration. It's a statement you make to your customer that this is a UK product, and you need to put certain wording on your invoice or on your declaration. But you need to make sure that you can legitimately claim that. You can't do it and then not have the evidence in hand. So this is the phrase that you need to put onto your invoices. So the exporter of the products covered by this document, exporter reference number. In there you put your EORI number, declares that except where otherwise clearly indicated, these goods are of UK preferential origin. So putting that on your invoice or on a statement will allow your customer to claim 0% duty when the goods are imported into their country. But you do need to put that reference on there, that statement on there, because otherwise they will be treated as under WTO rules, that World Trade Organization rules, where duty rates can run up to 35–40% easily for sort of dairy products and so on. So you do need to make sure you put that on there. It's assumed WTO rates unless you claim preferential rates. You can also issue a long-term suppliers declaration to your customers if you're dealing with them regularly. Sometimes customers may ask that, but you may not want to do that because you do have to put down the amount of the value of non-originating materials in the standard format. And you can also use what's called importer's knowledge, where you say, I know that that product I'm importing is an EU product or a UK product, and then you can claim 0% duty on there. That's fine, but you do have to be able to back that up. You do have to hold the evidence, and you do have to be able to show it if there's ever an audit or a request to do that. So what's changed in 2022? Well, we now need to prove origin to customers if required. Last year there was a dispensation on exports that which has now ended, where you could claim the origin was UK origin, but you didn't have to actually hold the evidence in place. You still had to be confident it would be a UK product, but you didn't actually physically have to hold that evidence, and no one was going to check. But now they might check, and you do have to have the evidence. And you also have to hold the evidence going back to last year as well. So retrospectively to the supplies in 2021. So if you've claimed origin in the UK and you can't claim it, you can't prove it, then you do need to probably advise your customers, because they may get a claim for duty coming forward, and you may get a fine if you've misclaimed it. So you need a supplier's declaration. If you're not the manufacturer or the maximum rule is not met, you need to have a declaration from your suppliers to say exactly what the origin of your product is. So you need to be able to claim it. You need to be able to prove it. If not, you should advise customs and your customers. As we've said, there are possible consequences if you can't prove origin. So the importer may be liable for the full duty. You as an exporter may get a penalty. And as an exporter, you could be excluded in the worst case from using preferential tariffs moving forward, which obviously you don't want to do. So it's important that you have the evidence. You can prove that your products are the origin that you're claiming them to be if you're claiming preferential duty rates. So what about the implications for VAT from Brexit, from the EU trade? So now VAT is due on all imports. It wasn't when we were part of the single market. You know, you could there was a reverse charge situation, so you didn't have to charge VAT. But now VAT will become due on all imports that have coming into the UK or going into an EU country. As we saw earlier, the UK did introduce postponed VAT accounting to allow you to delay the VAT to your next VAT return. But you do have to select the box. You need to request that. Otherwise, you will be charged VAT at the point of entry into the UK, which can be 20%, can be quite a bit for your cash flow. EU countries vary. There are different systems in different countries. Some have deferment accounts, some have delayed accounting as well. But that's your customer will need to understand what they can do with the VAT. That is unless you've agreed to deliver on DDP terms, which means delivered duty paid, which makes you responsible for the VAT in your customer's country. Now, we advise customers to avoid this like the plague. If you can, don't do this because it creates an awful lot of ongoing issues that you may need to, for example, have a VAT number in the country that you're supplying to in order to be able to reclaim that. Otherwise, you're paying the VAT and you can't reclaim it. There are different rules for B2B and B2C, which we'll look at, but it's important to understand that DDP can have consequences, has severe consequences. On exports, there's no liability for VAT in the country of export. So if you're sending goods out of the country, you don't have to charge or account for VAT, providing you can prove that the goods did actually leave the country. But as we've seen, the VAT is due on import into the customer's country, into their country of destination. And the liability depends on who the importer of record is. So as we saw earlier, if you're using DDP terms, delivered duty paid, then you will be classed as the importer of record and will be liable for the VAT. So as an exporter, we recommend you choose FCA or DAP terms. That means that you're responsible for the export declaration, your customer is responsible for the import customs declaration and import VAT and duty in their country. The difference between the two being whether you're paying the freight or they're paying the freight. So DAP is delivered at place, you're delivering it to them, you're paying the freight, but you're not responsible for the customs declaration or the VAT. So we recommend you use those terms, but you have to agree terms with your customers and with your suppliers. It's very important that you do that. As we've just been talking about, if you happen to if you use DDP terms or your customer or your supplier is insisted on that, then that will mean that you're the importer of record and would be responsible for the VAT and customs declarations and so on. In which case you may need a local VAT number and a EU EORI number. So as we say, you may need a VAT number in the customs country. In order to get a VAT number, many of the countries in the EU, you do require a fiscal representative, which is a local company, local registered country that takes joint and several liability for the VAT and duty that's due. And you may have to provide a financial guarantee to them to cover that. So there are many companies that offer that facility, but again, it's an additional cost. Often it's around 2,000 to 3,000 euros a year. Plus, obviously, a fees for offering their services. So, for B2C transactions, those change from July 2021 onwards. The VAT now becomes due in the member state of consumption. So again, the customer's country is where the VAT becomes due, and you have to charge the VAT rate at the rate in their country. Now, in the EU, that can range between 17 and 27%. So it's important that you know what the VAT rate is and what's going to be charged to the customer, or you need to charge to the customer. And you, as a supplier, can file a VAT return in the member state. You need a VAT number to do that, or you need to have what we'll come on to in a moment, the one-stop shop procedure. Low value consignment relief has been removed. So before you could send goods up to €22 and not pay VAT. Now that's gone. You have to pay VAT on everything. But they have introduced in the EU what's called a one-stop shop procedure. And this allows you to effectively have one registration, VAT registration, for the whole of the EU. This is specifically for business B2C to consumer transactions, so you can collect and distribute the VAT to the relevant authorities through this one-stop shop procedure. So you can choose which country you want to register in for the one-stop shop. You don't have to do it in every country, you can choose which one. Many of our customers are looking at Ireland, obviously because of the common language, it makes it easier to register there. And then you use that registration to handle the VAT for France, or wherever you're selling to. There are 3 variations of the one-stop shop for all goods and services. So Union-OS is for EU companies and intermediaries. Then you've got non-Union-OS, which is for service businesses that are non-EU. And Import-OS one-stop shop for the import of goods into the EU, but only below a value of €150. So those are the different schemes that are available, and you need to register for one of those if you're choosing to do that. But it's not compulsory. But if you don't follow it, then you would need a VAT registration in each country in order to be able to reclaim the VAT and carry out the transaction B2C correctly. Another important implication of Brexit has been triangulation of VAT. So before, it was possible for us, as a UK company, you could sell to a company in the Netherlands, as we're showing there, and buy from someone in Belgium and get them to ship it directly to the Netherlands for you. Well, that's no longer so easy. You can't do that anymore. That triangulation simplification is just not there. So in order to complete that, it's not so easy anymore. You need to have a VAT number in one of those countries. So you would have to have a VAT number in Belgium, for example, in order to send the goods directly to the Netherlands from your supplier. So it's made things much more complicated, and you need to understand that. You need to be aware of that in order to make sure you're handling it correctly. Now, other changes have been on sanitary and phytosanitary products. So on animal products, for example, products of animal origin and plant origin. There are new requirements which have come in. So now you need to pre-notify any imports coming from the EU into the UK on the new system called IPAS, which is a new computer system which stands for Import of Products of Animals, Food and Feed System. So you register any shipment coming into the country on there, so the government is aware of what's coming in and can tie it with the customs declaration, for example. If you're bringing in fruit and vegetable system, you can use the existing what was called Peach system, or IPAS if you're new to it. IPAS, everything will be moving to that eventually during this year, so that's going to be the main system that you use. But as from July this year also, some products will need to have identity and physical checks are being introduced. So your products could be checked as they come through border control post. As I say, the import is required through an authorized border control post from July as well, so that these checks can be carried out. So more checks will be there. So you need to make sure everything is correct. And you will need phytosanitary certificates on products that require that. So on all imports of regulated plants and plant products. And it's your supplier that needs to provide that. If you're animal products, you'll need an export health certificate also from your supplier. For most products of animal origin, animal byproducts, and so on. So you need to make sure that you have those certificates in place. In fact, you won't be able to register the import on IPAS unless you've uploaded those certificates. As we've said, it's your EU exporter that needs to provide those certificates. It needs to be from the relevant authority. for a phytosanitary certificate or an export health certificate. So moving forward again, it's a phased approach from products, phytosanitary products of animal origin. Most meat and meat products by the 1st of July. Dairy products is a little bit later, September. And any remaining products will be from 1st of November. So yeah, it's coming. You need to be prepared for it. You need to register for IPAPs if you're importing these types of products. You register through the government gateway account, and it doesn't take long to register. It's a relatively straightforward process, but you do need to do that. So you'll need to follow that process for any imports. Strategic export and import licenses. So this is for products which are controlled in some way. You need to apply for a license from the Export Control Joint Unit. And there's a list of dual use goods, for example, you need to, which could be classed as military or, as well as a commercial usage, in which case you may need to have a license for it to export it. And you can check on that website there whether your goods do need to follow those rules. Okay, so you need to do it in plenty of time to really to register your shipment in order to make sure that it goes through. On a separate note, now we're out of the EU, all wooden packaging, so pallets, for example, need to be what's called ISPM 15 compliant, so they need to be heat treated pallets, and unless they are, your shipment may be turned around or stopped at a port. So it's just something to bear in mind and check with your shippers. Approvals and CE marking. Well, the UK is introducing our own alternative to CE, which is called the UK Conformity Assessed. We have actually introduced that from the 1st of January last year. It covers most of the same products as CE, but there's a transition period that's been allowed up to the end of January, up until January next year. So you can use existing CE marking, but after that, you will have to use UK CA in the UK. You'll need to have your products assessed to be able to sell here. And UK CA will not be accepted in the EU, so you will end up having to have both if you want to sell into the UK and the EU. And just to make it more complicated, some of the conformity assessments you may already have will not be recognised and by the EU or the UK, so you need to make sure that whether they will be, if not, you'll need to be reassessed. So again, that can be quite a pain and needs a bit of time, so you need to be prepared for that and to do that well in advance. And there's a website there which will give you all the guidance you need on how to do that, or we can help you with that. Incoterms, I've mentioned before, Incoterms are now more important than ever. Incoterms decide who's responsible for what in the transaction, the shipment between two parties in different countries. So it brings extra responsibilities and liabilities depending on the type of Incoterm you choose. So for example, Ex Works means it's maximum responsibility for your EU buyer because they're responsible for the export, they're responsible for the export customs declaration and so on, everything from your door to their door. So it gives them the maximum responsibility. FCA, which we talked about before, gives you responsibility as the exporter for loading and for the UK customs declaration, but your customer is responsible in their country. So you're sharing responsibility there. The same with DAP, the only difference being with DAP, you're paying the freight and organising the freight to their door. But in terms of customs liability and declarations, it's the same split, it's an equal split. But as we saw earlier with DDP, that's the maximum responsibility for you as a UK exporter. You would be liable for duty and VAT in your customer's country. And unless you have a VAT number there, you wouldn't be able to reclaim that. So it's something to definitely be avoided. Northern Ireland is a special case, as we've seen. It's effectively treated as still part of the EU. There's a border effectively down the Irish Sea, which no one politicians wouldn't like to admit, but effectively there is. you need to have a customs paperwork in order to move goods between Northern Ireland to GB to Northern Ireland, and you don't between Northern Ireland and Ireland. So there is definitely a barrier there. The government's introduced what's called the Trader Support Service, which you can register for, and they will actually help you with the paperwork. They'll actually do the paperwork for you. So that's a very useful service that we do recommend you register for if you're involved in dealing with Northern Ireland. So as you can see, it's quite different, Northern Ireland to dealing than it used to be. But the Northern Ireland Protocol is being renegotiated. The initial period was to December 2024. Still negotiations going on because it's not run particularly smoothly. So we'll see, something we're keeping an eye on, because there will be changes. So there's a lot of information there, a lot of information to take in. So we try to summarize that in what you need to do. Post-Brexit, how do you export goods? So the first thing is you need the EORI number that we talked about. So whether you definitely need a UK EORI number, you may need a Northern Ireland or an EU EORI number as well, depending on how you're transacting. You need to understand and know the HS code for all of your products. That's your starting point for the rules and regulations which are going to follow for your particular product, and the duty requirements, and discovering rules of origin, for example. You need to be prepared for customs declarations. So you need a customs declaration on leaving the country, goods leaving the country and entering the country. You can do that. Most companies will do that through their freight forwarder or their courier company, or they'll employ a third-party customs agent. And there's been a big increase in the number of customs declarations that are required. It's gone up sixfold, up to sort of 300 million a year. So there are a shortage of customs agents out there, but we can help you. We offer a customs agency service, but your freight forwarder should be able to help you, or your courier company as well. But you do need to be prepared for customs declarations with the information that's required. Incoterms, you need to, as we've seen, it sets the key responsibilities. So you need to choose those carefully, and you need to agree those with your customers and your suppliers to make sure there are no surprises and no hidden costs for either party, basically. And then we've got rules of origin. As we've seen, understanding the rules for your product is critical in order to be able to claim preferential origin and therefore zero duty. If you can't claim it, then you're going to fall back on WTO rates, which may be heavy duty rates depending on the type of products that you're supplying. VAT procedures, as we've seen, they've changed. So VAT is now liable on all imports into the UK and into the EU. So you need to work out how you best to handle that with your customers, and also how to handle the triangulation. You can't now buy something in Belgium and have it sent directly to the Netherlands without having a VAT number in one of those countries. So you need to be aware of that and work out the logistics of how you're going to handle that. It can be quite complicated. We can help with that. We've helped many customers with that, but you do need to work out how you're going to do it. Certificates and licenses are now required on many products, as we've seen. The UKCA, Phytosanitary certificates, export health certificates. So you need to know whether your product needs a license now, what licenses it requires, what certificates it requires, and you need to be able to provide those in order to get your products in or out of the country. So there's a lot to consider. It's something to follow through in a logical order, and to help, we've put together a number of free resources. We have what we call our Brexit knowledge bank, which on there are a lot of videos from previous webinars and a lot of free guides that you can download that can help you on specific parts of Brexit. For example, we've got a post-Brexit export guide with a 10-point checklist to go through, rules of origin guide and a workbook to help you work out, if your products comply with the rules of origin. And 7 key changes is a new one we've just done for this year with the new rules that are coming in 2022. So there's a whole list of free resources there. We will send out a list of the links, or they're all on our website, goexporting.com. If you click on resources, you'll be able to find each of these. But what about the opportunities? Brexit is not just a bad thing. There's some good things as well. So what about the opportunities? Now it's pretty much the same selling to any country. You know, previously there's 135,000 businesses, it's reckoned, only sold into the EU, so they've never been exposed to export documentation, customs documentation, rules of origin, and so on, VAT. But now selling to the EU is just the same as selling to anywhere, to the US or to Australia, to the Far East. So we believe, you know, it's a great opportunity to rethink your global footprint. And what we say is, you know, look at where are the opportunities. It's been easy in the past, but now all countries are the same. So review all of the markets, look where there are free trade agreements, on UK terms. For example, the UK-Japan free trade agreement has better terms for UK cheesemakers, that's Stilton manufacturers, than it did for, you know, as part of when we were part of the EU. So it allows Stilton to be a named UK product. So there are opportunities there. So look at the free trade agreements. Where are the opportunities to expand and review your global footprint? You don't have to be stuck to sell just to our near neighbours, because it's no different now than selling anywhere else. So as we say, expand your horizons beyond the known. Think globally, redefine your global strategy, and look at new routes to market. Maybe that you have to change your route to market even within the EU because of some of these rules and regulations. You may decide to go through a distributor or have your own entity in these countries, or at least to have some kind of setup with you know, a 3PL, a distribution hub, for example, so that you can overcome some of these difficulties that we've been talking about. Looking at custom special procedures, for example, can help with a lot of those things. We helped a lot of clients with that. So review your routes to market, see what's the best. But also look local, because, you know, the same issues that UK companies have had selling into the EU companies have had selling into the UK. So some have given up, or some have, you know, finding it more difficult. So look local. There may be some more opportunities locally because of space, you know, that's been left by EU companies pulling out of the market. So don't forget to look local and enhance your domestic market as well as internationally. Again, we've put together some useful free resources on expanding your international market. So we have what we call our expert exporter resource hub. In there are a number of different guides. There's around 14 different guides, different aspects of exporting, everything from are you ready to start exporting through to finding a distributor, analyzing your markets, and so on. We'll be adding to that. We regularly add to it. We'll be adding more videos and so on to it. So it's worth checking back with that frequently. We've also written an ebook called The 7 Steps to Export Success, which gives a step-by-step guide on how to go from 0 to $1 million in export sales. And we've written an international marketing white paper to show you how to export, how to do your marketing internationally, which is different to marketing in the UK, particularly your digital marketing. So there's a lot of information in that white paper that will help you with your marketing planning. So thank you very much. I hope that's been useful and covered a lot of ground there. As I say, we will be making this available to everyone that's registered. It will be available on our website, both the recording and also the slides. And we'll be pleased to answer any questions that you might have. If you have any questions, please do put them into the chat box or into the Q&A. I can't see any at the moment, but so if anyone has any, please do put it there. Otherwise, we'll be pleased to answer by email if you think of something afterwards once you've had a chance to look at it. Regarding DDP, someone of Lorraine's asked, how do I pay the duty? Well, that needs to be paid to the authorities in the country that you're exporting to. So at the point of entry into their country, if you've used DDP terms, they will charge you whatever duty rate, whatever value that is, and you'll have to pay it before the goods are released into free circulation in that country. So that's, you'll get a charge, same as you will get a charge for the VAT. How? Well, the freight forwarder or the customs agent will, that's clearing the goods, will get a bill, and they will send you an invoice, and they will ask you for immediate payment in order to, so that they can clear the goods. So it'll be your customs agent or your courier or your freight forwarder, whoever's doing that for you, that will demand the money from you, and they will pay that over to the authorities. So I hope that's answered that question. If there are any more, please to answer. Okay, so we've got another one from Caroline. If we export DDP to France, do we need to have a French deferment account, even if the duty is nil as UK origin goods? You don't need to have a deferment account unless the French authorities insist on it, but in most cases they won't. It will be the freight forwarder that will use their deferment account, and then they will, or your customs agent will use their deferment account in often, and then they will bill you for the amount. Obviously, if it's 0% duty, there'll be no charge, but there may be the VAT charge, which if you're not VAT registered in France, you wouldn't be able to reclaim that VAT. So that's the complication there. Duty may be 0, but you may have the VAT liability. Okay, yes, so you think Caroline thinks she uses the agent's account. Yeah, so that's often the case, that the agent will do that, but they will bill you and you'll have to pay it straight away. If you're doing a lot of exporting like that, then it may be worth having a deferment account, you know, in France to ease your cash flow, to make it not so difficult. But that's, you know, that just depends on circumstances. Okay, so I think we've answered all the questions for for the moment. As I say, if anyone does have any further questions, please do feel free to email them through. We'll be delighted to answer them, and we'll circulate the slides, as we say, and the recording after the event. So thank you very much. Thank you for your time and your attention, and I hope it's been useful for you. Thank you very much.